Good morning. Quick commodity news from macro point of view channel. Please subscribe if you still don't do it. We'll focus today on energy market, to be specific on crude oil and NatGas, as this is most popular energy sources at the moment in the market. So let's begin with Brent oil, which as we can see on daily chart is still above $83.5 per barrel since OPEC decided to announce another deeper cuts of their production. And yesterday and the day before, we've got also huge rises from this bottom level of 83.5, $84. So we can see it. It's here, 84. It's here, and we keep rising above 87. And it's because the CPI level in the United States become lower than expected, which push Federal Reserve in States probably to not rise another rates on their next meeting in May, which means the goods denominated in dollars, the dollar is start falling and everything like that. So the market is focusing on counting down the recession, which is a very good thing. But on the other hand, it means that probably the oil consumption will rise, and with deeper cuts from OPEC, it means that will be less oil, which rising the prices. Of course, there is also some planned maintenance on Caspian pipeline, which will take a couple of weeks, and it's planned, so it's good. It's not like it was before, that it was closed due to an incident. So it's planned, but it's still reducing 1% of global supply of oil to the world, which is keeping the prices higher. So I don't expect today or tomorrow to this price to fall under $85 for sure. I think we might reach the top of this levels over here around 88 and half. So another $1 should we rise today, as there is nothing important for this oil market to be announced today or tomorrow. Tomorrow we've got retail sales from United States, but it won't affect oil market very deeply. So I think we can accept to keep rising this price another dollar up for the next two sessions. So this is short announce about the oil. I don't expect really falling down, but I think 85, 84, it's a very strong support at the moment, and as we can see, it was tested many times since OPEC decided to cut their production. So let's now take a quick look on natural gas, and it will be very short episode, and because natural gas is very low, and this is not unexpected, as we still got over 20% more gas in the United States storages than the 5 years average, and still we've got cool weather, low industrial activity. It's still sending the record level of LNG terminals, so it's very good, but it's not enough, as at the moment United States of America is making in April over 100 cubic feet per day, and it's very close to the record production from January this year, but the demand including export for this week is 97.5, and next week should fall to 95.3, which means the stock levels of natural gas in the United States will keep rising. So I think we might expect this stock levels around 25% above 5 years average at the end of April, which won't be really surprising, but it will give a good advantage. I'm at the moment looking myself to get a long position for natural gas for about next six months, expecting a bit warmer than forecasted summer, which will consume more energy for the air conditioning, so it means it will consume more natural gas, as natural gas will remain stable in the energy mix this year. According to Energy Information Agency, it will be 39% of energy will be produced from natural gas in United States, which is huge stake, and I think it will be the main impact. Also, before winter we should also see rising, as there will be probably some forecast about the cold winter. It will be coming up at the end of August, beginning of September, through September, and if we're lucky, at the end of the September, United States might experience some first really low temperatures, which will rise the natural gas prices. Also, in the meantime, there will be probably closing of natural gas drills, as there is lower price than some of them costs. It's because last year, 2022, created a 30% inflation in a drilling sector, so for both gas and oil. So that means the very low price of gas will be a huge problem for the companies that focused only on like natural gas as their main product. So they will probably cut some costs and wait for the price to be higher, and those impact time takes couple months, and because we are already third months with the very low prices above $3 per MMBTU, that means we should see dropping gas rigs number next week or at the end of April or beginning of the May, and it will take some time to reverse that when this price will start rising. I think there is hardly impossible to reach $4 before July. Maybe in July, very hot July, or very very hot forecasted, that it's not yet already. They saying it will be warm, but not so warm as couple last years. So I think the $4 before July, it will be unreachable. Maybe $3 or $3.50, yes, but not really sure about it. That's why I'm trying to find myself into the position for about 6 months from now, and to be able to earn some money during this period. It's also possible that some of the big whales of this natural gas market will try to drop price a little bit under $2 to make sure some stop losses are cut from the market, and then start rising again. So this is my idea, and thank you very much for watching this from my point of view. I think it's pointless to have information that's not so relevant for this market, and a quick look on the energy market just before starting United States market session, it's a very good idea. Thank you very much. Give me in comments and ideas what you think about those short commodity news. Subscribe the channel, and let's keep in touch. Good luck.